Ira Epstein with your SPDR ETF video, and this is for Thursday. And we are now on the 6th of February 2020, and we're getting on towards 5 p.m. Central Time. Interesting day in the stock indices themselves, and as you can see, we've got a number of them up here. Some of them hit new record highs for the year today. In fact, I think since the first of the year, we've had 6 record high closes in some of the indices. Pretty powerful, isn't that? If we take a look at the energy sector, sort of stalling out right now, not doing a heck of a lot one way or the other. In the foreign currencies, be it the euro, the yen, the British pound, they're falling against the dollar as the dollar's got great economic data still happening. We're going to get some jobs data tomorrow, so you want to keep your eye on that. But everything we keep seeing in the numbers just as good relative to how everybody else has been doing. And of course, we don't know about the coronavirus yet. You're going into a weekend, big rally. The question is, over the weekend, you can get any kind of news from China. Do people take some money off the table, especially at these record highs? I'll leave that up to you, but it's things you've got to think about. Now, I made a change for this afternoon. If you see my SPDR ETF video for the subscribers, and remember, that's free if you go to our website and sign up for a free trial. And I'm starting to highlight where my cursor is, smooth out the effects. I'm going to apply that, in fact, on my futures video first thing in the morning. But let's get to the chart action. First, when we look at the technology sector, inside trading day, you had a gap in the chart, you broke out. Now, gaps on these type of charts, which are the SPDRs and ETFs, they last longer than I've seen on futures charts, for sure futures charts, and individual stock charts. I think the reason is, the reason for that being, they open at 8:30 in the morning. The futures market, many of them are based on components of that. That market opens at 5 p.m. at night and trades like tomorrow it'll stop trading at 4 o'clock. Well, these markets have to catch up with what some of those do. They get to react to Asian news, European news, and when you come in on these, unfortunately, you're at the 8:30 time frame, which is a little different. But what do we have in the swing line? Now, you learned this in my charting course, by the way. The swing line's got a pattern of higher lows and higher highs. So it's in an uptrend. The definition of an uptrend is higher lows, higher highs. The swing line is the way that I smooth that out. I look at moving averages. The market is staying over what I call the line in the sand, the 18-day average of closes. You can use a 19, a 20, 21, whatever you're comfortable with. I'm very comfortable with this one. And what I'm looking for is on pullback support against this number. And I'm looking, if it's a filter on other one of my indicators, others, more than one, I'm looking to see has it developed an upside or downside bias. With an upside bias, which means prices are staying over the 18-day average of closes, as long as the bias is up, other of my filters get activated. What about resistance? The upper Bollinger Band and lower Bollinger Band are shown on the chart. The concept of this algorithm is the market will trade within these bands, number one, within them 95% of the time. That means outside of them, but 5% of the time. So anything over them, it's not a sign of weakness, it's certainly strength, but it often means that the market can be bought either in a more balanced idea or under that number, whatever. I think that the first challenge of them is where the pros take some money off the table. So the first thing you should say is, Ira, it hit it back here when the market was 99.12 and it's higher. It's now at 161. And my answer is, okay. Nobody went broke taking money off the table. You can lose opportunity. And number two, if you came out there, you could always have a trailing stop. There's many concepts, but I won't change my opinion. Markets don't stay outside of Bollinger Bands more than 5% of the time. It's not my opinion, it's the math of it. And therefore, I look, yes, it's a bull trend. Yes, it's up here. Maybe if you want to come in, you can come in better. Maybe you come out. That's up to you. I'm looking for the same resistance right here in the overbought condition. So if we come to this chart, you did not see the momentum. You're just seeing the number. Now you see it's overbought. So I have more confidence with that than I had before. I still think I'm right in what I'm saying. As I look now at the industrial sector, this is what I call a vertical price move. Let me explain that. you came down, you hit the bands right here. I realized that the market gave up a certain amount from there. But as the market starts up on an oversold area, this is still where I think the pros, right here, that's where I think they came out of the market. First resistance should be the 18-day average, but it's oversold. As a pro, do you want to sell an oversold market? That's, again, the concept of the filters. While the swing line's down and the bias is down, it's oversold. The market jumps through and negates that trend. Now the question is, where could it go? I won't change my opinion. If it goes up, I'm going to look for the Bollinger Band as a possible top. Haven't changed my opinion. Now, what else? Are we trending? No. You got a higher high, a lower low. So the neutral zone's here, and the market is already in overbought territory. Any reading over 70 in slow stochastics, the way I teach them in my course, is overbought. When I come to the energy sector, warning sign, warning sign. This market has lost its embedded reading. It didn't yesterday, it lost it today. To me, that's a sign that the pros are taking money off the table on the short side. If the market wanted to mount that rally, when you lose it, unless you get it back the very next business day, the odds favor that price in the 18-day average will make a run for it. So what a lot of traders will do, maybe they came out tonight, otherwise they're watching in the morning, but if that number jumps up very much, I would not be surprised that you see more short covering hit this market. I can't tell you it's new buying, but it's probably short covering. QQQ. I see an overbought market over the Bollinger Band now 3 days in a row. Warning sign to me. It doesn't mean it can't go higher, won't go higher. That's not what I'm saying. Am I bearish? No. My swing line's got higher lows now, higher highs, and I'm looking at that. I still think the market is a bit ahead of itself. Emerging markets, you ended the downtrend. Take a look. You had to get through 68.93. You didn't do it yesterday, but you were oversold. You had an opportunity. This is the first break of it. Something I want to teach. The art, part of the art of Bollinger Bands is how narrow or how wide they are. This is what you call a very narrow situation. So breakouts with them have more chance of staying in that direction for a while. Watch. This is what you've done. Now, you've got a combination here of the lower Bollinger Band and the 100-day average. Go back on your charts. More times than not, that's an area that pros are coming out of positions. Why? It's just a strength area. So now the market today got through this last high, stopping in the neighborhood of that 18-day average. This leg of a downtrend, as far as I'm concerned, history, over, past information. Gold, stuck at the 18-day average. It's stuck in between these bands, which are narrow again. That's not a bad thing for bulls or bears. You want to see them start narrowing for whatever the next move is going to be. Momentum is still pointing down, but it's like a horse. You're reining it in, as you can see. If the market were to take out 145.80, I would bet that, at least in my head, the market then is going to try to wash out these longs here and try to drive to another level. The first objective might be the lower Bollinger Band. If that all gave way, you could be down here. What if it rallies? Well, if it rallies from here and you get that momentum turning, could you go back to the resistance that you failed at? Yeah, you're sort of in no man's land right now. In the gold miners, I'm going to put that one back. You tell me what you see. You came down, first challenge of the Bollinger Band. I'm going to say it again. That's where I think the pros take some money off the table. Now, you came back to the 18-day average. It's a resistance point. I think the bears are still controlling this market at this point. You closed at 40.95 under the 18-day average. The bias is down. The trend is down. I think that they'd be wrong. I think the bears would get out if you hit 41.92, which happens to be right into the Bollinger Band, but there's a point at which you say, I've had enough. If you take a look at the miners, you hit yesterday the lower Bollinger Band and right into that 100-day average. That's where I think the pros were coming out. If they're going to sell this market, my question is why? You're going to go, what's he saying? Any reading under 30, you got a 28 reading, that's not, to me, a sell condition. That's oversold. You don't have that in the juniors. That's the difference on the two charts. TLT, Was that it for low rates? I don't know. You stepped out of the uptrend when you broke through this low. You lost the embedded reading. What do I say here often? The first time you lose an embedded reading, and that reading was lost today, unfortunately, so you're not able to take advantage of it, but you go to the closest moving average. That's at least my theory. Does it work all the time? Nothing works all the time. But that's my theory. Now you're neutral in the market. You've got support between here and the 100-day average. I think that leg of the bull market's over, but I don't see it having yet started a down leg. In USO, unlike what we looked on the other part of the energy sector, it's still embedded. So I'd be looking on the opening, is it going to keep that? Well, if it does, I think the bears will be at play. But if you see that red jump over 20, be careful. As soon as one part of a complex starts doing something you're not ready for, use caution. Coming to the FXC, the euro currency. Again, you hit the Bollinger Band, you ran it. You had that one run up into the 18-day average. This is a cover short area in my opinion. Okay, I'm not telling you to cover your shorts. I'm not telling you to go short. It's a cover short area is what I think could be going on here. And there's a lot going on in the yen and the British pound, so you want to be looking at that because that's what I think the pros might do there. So what I said to you about my charting course, what I try to do in the course is teach you to do this yourself. Are you going to be wrong on trades? For sure. You're going to be right, you'll have winners too. It goes both ways. The idea is a discipline. The idea is that you have to learn money management. Nobody can win every trade. It's just the way it is. But to just throw a dart at the market, to just say it's coronavirus, I'm getting bullish on this, or bearish. Markets have a way of getting ahead of you, and they're already on to another thought process. So what I try to do is give you just what I'm doing here so you can do it yourself. So I put together a series of videos, and it's about 60 of them, each one about 10 minutes long. And you're able to go in, you're going to learn moving averages, swing lines. You're going to learn first, because the way that I did it, it starts off at the very beginning with a PowerPoint. I teach you the concept like this. Then I show you how to set it up on your charting software, because most of them work the same way, the charting software products. Then I teach you how to use it. I'm going to, at times, let you see the name of the chart. Other times, I'm going to take it away. But I always end up with the end, letting you see the name. And the reason I do that is you're going to have a preconceived idea, which is not the thing to have. Let the chart do the talking. Example, the reason I show this example, from this pattern, you've taken out all the volatility, you've crashed the market in terms of volatility, it's getting ready for a move. So I start prepping you. Get ready for those moves. How are you trying to catch them? Do you even want to catch them as they initially break out, or do you want to see if it's a real or false breakout? I write about it. You're going to get that. And then I wrap it up for you, because at 5:30 to 5:45 in the mornings, Monday through Friday, I'm recording a morning video going through what's going on in Asia, Europe, and bringing you right in for the day's trading. Now think about it. I'm going to have that out typically by the time I finish the recording and rendering it for you before 7 a.m., often well before that. And it gives you an update where you're at. And the reason I do it at that time, in New York, that's 7:30 a.m. Come on, people sleep, they're just up or getting to the office. Chicago, it's pretty early. LA, it's a lot earlier. So I had to find a time zone that worked for everybody so I could be current with the market for them. That's where the current part comes. What you're looking right here, this is what I think going in. Now tomorrow I'm going to have a better idea. But so will you if you learn how to do a lot of this on your own. And you start saying, you know, if I learn one idea out of that, sort of makes sense. This is not one of those crazy expensive courses, folks. Go on to our internet. Under the word education, you'll see. You get the charting software to go with it. You get the course, the videos. You're going to get access to my morning research, so I can make sure you're getting something if you're not already a subscriber. I'll make sure you're caught up with where you're at. The course should take you no more than just putting in a little time each day. A couple of weeks, 2 weeks. That's it. The way I teach, it's redundant. You don't have to go back over the course over and over. You're going to get it, I hope. I'm Ira Epstein. Take advantage of it. You have a good day.